I've pulled up the daily chart for cable because it's a really nice example of Wyckoff's second law. And secondly, we're also look to be seeing a really nice breakaway from the area of a congestion that has been in place now for some time. In fact, if we look at the volume point of control here, which is this yellow line, which is where we have volume and price over time, cable has been oscillating sort of around it. If we go back really to the back end of last year, there hasn't been a clear direction. As we can see, it's tried to break to the downside. I don't know whether you can see the wick to this candle, but we had some price support come in. It went back into the volume point of control, into the congestion, into the consolidation region, and it simply has been moving sideways. And certainly before this week, you can see what we have is a succession of daily candles, which are almost like piano keys. We have an up day, a down day, another down day, an up day, etc., etc. But it now looks as though it is going to be breaking out. Now, the key point I want to sort of emphasize here is not so much that yes, it is a break and it looks to be a successful breakaway from the consolidation phase. It's more in the sense that it's a really nice expression of Wyckoff's second law, which says it's the law of cause and effect, which is basically the longer the longer the period that we have the cause, the greater will be the effect. And given the amount of time cable has been in cause, if you like, in consolidation, we've got some, this pair, I think, has got some way to run. So this is on, as I said, this is on the daily chart. What we also have down here is we have the CSI, which is for these lines represent the individual currencies. So we've got the yellow line, which is the British pound, and we've got the red line here, which is the US dollar. And we can actually see we're seeing quite a strong divergence now for the dollar. The dollar seems to be falling quite sharply. But look before this divergence, and you can see the lines were moving in parallel. And this is one of the features of the CSI. Not only does it pick up the divergence between the pairs, but when the lines are moving, in parallel, then we know that there is a consolidation phase in progress, as it were. Now, this is the daily chart. What implications does that have for intraday traders? Well, it has a couple of implications. One of them being that once you know the currency pair is in a consolidation phase, or in any other instrument, as it were, if you are going to be trading on the faster time frames, you're going to get more choppy price action. Because it's not in a trend on the slower time frames, you're going to get many more reversals, as I said, possibly more whipsawing, and you have to then take account of that, not only in the time that you stay in a trade, and when you see a trading signal, you simply have to be aware that possibly the price will simply reverse and then perhaps move on in your original direction. It is this, what I can only describe it as, choppy price action. It doesn't mean that it's not tradable. It simply means that you're probably going to get many more reversals on the faster time frames. Now, when it is in much more, once a trend is underway and we look as though we have this trend now that's been moving higher for cable, and reasonable volume that's supporting the price action and the candles. What that means is, on the faster time frames, is a much smoother price action. Any sort of correction or reversal is simply going to be that we're more likely to get a resumption of that trend. Whereas when the slower time frame is in the congestion and you do get a pullback or a correction, that is more likely to be a reversal. It's not going to click back into, as it were, into what we call the dominant trend that is on the slower time frame. The question now, of course, is, well, where is the price heading to? Given that we have had this break on the slower time frame. And this is where our other principle of a key principle of volume price analysis is obviously our support and resistance levels, and how do we measure them, how do we mark them on the chart. Those of you who follow this YouTube channel will know we have developed, David and I have developed very specific indicators to help us, if you like, give some sort of hierarchy to these key levels on the chart, and not only where the price is likely to be heading to, where is it likely to pause, but also where it is likely to reverse. And we have premised these on the Camarilla protocol, and the way we have developed the indicator is that the values that come onto the chart on the time frames up to but not including the hour, these values are refreshed every 24 hours, so you will get fresh values. But once you go onto the hourly chart right through to the daily chart, you actually get the levels for the whole week, for the entire week. And what's interesting with cable is that if we move back here down to this R3 level, now the two most important levels on the Camarilla is both the R3 and actually the R4. So if we look at the R3, and given that this break occurred earlier on in the this week, as it were, we go down to the S3 here and go back to the beginning of the week, the break actually came off this level here, off the S3, and it's made its way all the way to the R3, where it actually paused. What happens with these key levels, they act as a sort of target, as a sort of magnet for price action. When they get there, they can have a habit of simply congesting, because they are so important. Broke higher from the R3, a little bit of volatility this morning, which we can see on the faster time frames. And in fact, the R4, as I said, is a very important level, and that is where it's kind of pausing and again moving into consolidation. So you can see here the consolidation phases on price action, they are hugely important. So where is this wanting to go next? What is the next level that is drawing it? Well, our Camarilla indicator has actually 6 levels. Some only have 4. So let's see where this is a likely target, as it were. Well, we've got a 138.98. But the beauty of the indicator is that these levels are in play now for the remainder of the week. There's also on the weekly chart the levels, you can have levels that are there for the rest of the week. But I just want to focus on the hourly, and also the faster time frames. Moving to what has happened this morning to push cable even higher. As we can see here, we have had a lot of volatility. We know we've had volatility because the volatility indicator has actually triggered. These are these little purple arrows. Volatility is, is when this is triggered when the price action in this time frame goes out of the average true range. You measure volatility in 2 ways. You may either use standard deviation or you use average true range. We've chosen average true range. There was a lot of volume under here, a lot of momentum, and whilst after the candle was triggered, we had the usual reaction in as much the next candle retraced to within the spread of the candle. We can see here, we can see here, we can see here, we can see here. There was enough momentum in this move to drive it ever higher, and in fact it took it up to the where are we here, this we've got the BPOC, yeah, back to actually the volume point of control on this particular time frame, congestion, and we are back at the R3 on the 15-minute chart. So it's really just to give you an insight into what you should be looking for in terms of chart structure, in terms of trend, but more particularly into, as I said, consolidation phases and why they are so important. They're important because that's where trends are born. You get reversals, you get pauses, but it's also important to be able to have on the chart the levels that the price action is likely to be aiming for. And what's interesting now, we've had a ton of volume come in under this candle off the R3. It looks like it wants to break higher. The volume point of control itself will also act as its own support and resistance, and in this case it will act as support. We've got the R. We know what the medium term perhaps target for this pair is based on the hourly chart, but immediately ahead, well, we've got today's high, which is just below the R4, which sits at, let's have a look, 138.58. So we're moving. I'm just waiting for the start of the cash open on Wall Street. What also may drive this pair higher is if the dollar continues to sell off, and it will continue to sell off if the indices are in risk on sentiment. You tend to get a weaker dollar if the indices and equities are going higher. So that too will add, if you like, another driver to the technical picture that we can see on the chart. So there's no reason to, be afraid, if you like, of congestion phases. Be wary of them. You have to first of all, understand them. Why are they developing? And once you do get the break, then have some means of displaying on the chart where the price is likely to be going next. Now, this is forex. What we've done is a fuller explanation of not just Wyckoff's second law, but all of Wyckoff's work. It's really VPA is premised on much of VPA is premised on the work that he did back in the 20s and 30s, and it's now all encapsulated in our. Get it back here in a second. Where are we? Our quantum trading education forex program, where it's not just it's the technical analysis. You have all the modules to support a trader, really to give a trader the knowledge and skills, everything they need to become successful in this market. As I said, obviously VPA and Wyckoff is all contained within the technical analysis module. And you will have noticed also that we also now offer the opportunity of what we call participation into a funded forex program, but I'm not going to explain that. I'm actually going to pass to David, and he will give you much more of a background of what this can do for you. The program also comes with a complete set of the quantum trading indicators, and those you can find here at Quantum Trading. As you can see, I was using the MT4 platform, but they're also available for Ninja, TradingView, and TradeStation. But just to give you a little look of what you actually get at the back of the education program, it is such a comprehensive program. I think there are over 200 videos and podcasts. It is very, very, as I said, the best word I can use to describe it is comprehensive. If you do a Google search for some of these terms, if you put in Wyckoff's second law, it comes up on Google, and what it gives you is these are just the elements that make up part of VPA. So you won't be able to get beyond this. It will just give you a look inside of what is available. But once you are a student and you go behind it, as it were, obviously you have access to the videos and the podcast. And I'll just play you a little bit of the video. There's no voiceovers to the videos. All the videos are animated, really, because and designed in such a way to help with retention. I don't think you'll be able to hear the music that's underneath it. I'll just turn that down as well. But it's if I just play it through here. And essentially, all you have to do is sit there and watch and read what is on the screen. There are podcasts as well, which go into the concepts in more detail. So what I'm going to stop there. I'm just going to pass over to David just to give you a little outline on the Forex funded program.
Where will you find all the bits and pieces? You'll find them here this is where you'll find all the indicators at quantumtrading.com. We have all the platforms, MT4, 5, NinjaTrader 7.8, TradingView, which I've just been through with you, and also TradeStation has now been launched. We've got two versions of that. That's the TradeStation 9.5 with interactive brokers as the live feed, and TradeStation 10, which is TradeStation Securities, and they of course incorporate the awesome power of radar screen, which is wonderful. And remember, when you invest with us, there's several things to remember. First of all, you can move your indicators from platform to platform. So if you start with one platform, you perhaps want to move to another platform, that's perfectly fine. We don't charge you for that. We just transfer your indicators across. We have a lot of customers who start perhaps with MT4 or TradingView, then they want to move to TradeStation or NinjaTrader. Perfectly fine, we do that for you, absolutely no charge at all. And finally, if you do, whether you buy one indicator or several, if you upgrade to another package, for example, we will always give you a credit for those indicators. So you never lose out, you never lose your initial investment. We always protect you in that respect. So you'll always receive a full credit. And finally, of course, if you invest in the full package, even more so with TradeStation at the moment, because it's currently at $677, I think off the top of my head. But once those other indicators are developed for the platform, then we will be increasing the price, which will align with the MT4 5 platform. So it's a great time to invest with TradingView because, as I say, you'll get all those indicators free of charge. You won't be paying for them. So it's not a bad time to invest in that package. But all the other packages, if you invest with a full package, we also give you all future indicators we develop free of charge. It's just our way of saying thank you. Finally, just to give you a heads up on the education program, I've just touched on one or two aspects of it. Obviously, within the program here, it's called the Complete Forex Trading Program because that's exactly what it is. To say it's comprehensive is a disservice. It is everything you need to know. You have all the modules which cover the psychology, the fundamental analysis, relational analysis, so you'll understand how markets relate to one another in terms of risk, in terms of relationships to bonds, bond yields, how commodities fit into that structure, and of course the actual relationships within markets, you know, how currency pairs relate within the markets themselves. You've got a deep dive into technical analysis, of course, that is VPA. It's all the Wyckoffean principles, it's Wyckoff's three laws. And in addition to that, it's how to apply VPA, not just to straightforward analysis, but we teach you how to understand when a trend is coming to a pause point and to identify whether it's actually a reversal in trend, in other words, from primary to primary, or is it simply a pullback? And if there's one thing that you would learn, it is simply that, because that will stop you getting out of trades too early. It's as simple as that. The mechanics of trading, and then there's something like 200 to 300 hours of video, VPA chart examples, how to use the indicators, pulling it all together, topic webinars with Anna and myself, a huge webinar library, and a resources section as well. And of course, all of that is backed up now. We've added the QTE funded Forex program. And the reason we've done it is very simple, because we wanted to give you, our students, and this is only available to students on the program. I'm sorry, it's not available to anyone else. If you're a student on the program, you have the option to join. It's there to give you the opportunity to leverage your knowledge. And it's very simple in the way it works. It's a no risk deal as far as you're concerned, because you are trading our money. It's as simple as that. We give you the opportunity to start with an evaluation account at $5,000, $10,000, or $15,000. Once you've achieved a very achievable target at that level, you've proved to yourself that you have the consistency to trade, you've proved to us you have the consistency to trade, we then multiply it by 4. So if you start with a $15,000 account, we push you up to 60,000, and thereafter we double it. So you go from 60 to 120 to 240, and in pretty much no time at all, you would be up trading $1 and $2 million accounts. It is simple as that. There is no risk to you. There's a one-off fee to pay. That's it. That's your only expense of getting into that particular program, but it's entirely optional. What we've now bolted together, we feel it gives the complete package, if you like, of giving you the opportunity as a student to benefit from your knowledge and prove to yourself that you can trade a large money account at no risk. So that's it. Hope you've enjoyed this particular video. Lots more to come as always. Thanks for watching. See you again soon, and bye for now.